This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are in the second half firmly of the week. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Well, it's a orange or a red alert. Schools and colleges are shut, but someone asked me whether private offices will be shut as well. Well, it's not. We're here. Markets are trading, and welcome to the show.
It's actually not a bad day to come to office, right? Because the roads are empty since schools and colleges are shut. Yeah.
You know, I have a cab that I book and I come every day. So he called me up and said, "Sir, today there's no work." I said, "No. For us, there is work. I miss being a child today."
You know, I was at home and I asked our colleague Santya to check if it was schools were shut. This was in the evening. Yeah. And I think she called back. She said, so schools are shut. And the first thing I did was shout out loudly. And I could hear.
Someone gets to stay at home, right? If it's not you, at least the kids are at home. But the Fed hike has come and gone, and I think the market has been pretty unruffled and has moved on.
It has moved on how, Sonia? Because I'll tell you why. Because, it seems like it was a kind of flat close, right? Choppy during the course of the reaction yesterday, and then by close, nothing. It was absolutely flat. And the changes will come up on your screen. The Dow 0.25% higher, the S&P almost nothing, the Nasdaq down about 0.12% or so on your screen. So you'll say, well, it's nothing. The FOMC hiked, but there was no new guidance which was provided. We don't know what the Fed will do in the September meeting, one way or the other, or beyond that. Basically, we don't know. There was no new indication of which way the Fed will go. This is the line, I think, which stood out. I think Chair Powell wanted to say this as clearly as possible, and I'm paraphrasing here, but this is part of what he said. He said, it's possible that we would raise rates again. It's possible that we would hold steady. So he's being absolutely clear that he's not being clear, that he doesn't want people to lean one way or the other. But nevertheless, in the press conference, the tone and tenor shifted dovish, more optimistic, and the markets responded as well. The US market also, I kind of started with the fact that indices were flat, right? The headline indices, but beneath the surface, there is strength. And this is the reason why I'm saying this. The Russell 2000, which is the small cap universe in the US, that ended up about 0.6%. You got the banks index, which is up 1.5%, and WIX is below 14. And actually, this is a pretty positive setup. So forget about what the S&P did, which was nothing, which was flat. Look at this picture, and it tells you that the undertone is positive. And I would say that given this kind of picture out there in the US as well, and what we heard in the press conference, the bias is for the upside in the US as well, maybe later today and over the next couple of days and weeks as well. Now, for the Nifty, just to come back here, and we said this day before yesterday, that if the index were to hold 19,620, you're in a pretty good place. The sideways consolidation perhaps would be complete, and that's exactly what panned out. Day before yesterday, the low which was made was around that 19,620 level. There was a decent bounce. Yesterday, the market ended 0.5% higher, and I think that's the starting point for us today. So I think the way to think about this is as long as the Nifty stays above the 19,620 level, I think you should look for upsides and not downsides. Maybe it'll be a little choppy, etc. But I think and I said this almost exact same words yesterday as well, it's possible that the sideways consolidation is over and that the market wants to go higher once again. One indication is that the Nifty and other indices as well continue to make higher highs and higher lows. Basic Dow theory. Now, banks index closed about 0.5% as well, almost 0.5%. On the banks, we should cross the recent high first, which is 46,370, and then perhaps head a little higher. Key support for the Nifty bank stands at 45,673. The GIFT Nifty rates will come up on your screen, and I think that is indicating a positive start. And why not? Because of what we heard overnight, and of course the momentum that markets have been seeing for the last 2 days. Day before yesterday, bounce off the lows, and yesterday a positive close by itself. Sonia.
Oh, absolutely. And you call this sideways consolidation, right? I mean, even amidst this sideways consolidation, the market has gone up 5% in a month. Yeah. So that's what we're used to so far. The kind of stupendous rally that this market has seen. There was a very strong recovery that we saw on Dalal Street yesterday, and this 5% rally that we've seen in the last 1 month has been backed by a lot of institutional buying. So even yesterday, you saw both FIIs and DIIs buy in in the cash markets. FI has bought a little under 950 crores and DI has bought about 500 crores or so. The markets globally and locally have priced that Fed hike in. So you saw the Dow end up about 80 odd points. There were good earnings that came in from Meta. So, that's another thing that the street is focused on, earnings and how it's improving. So Meta reacted about 9% higher, post a good set of earnings globally. But locally, you have a lot of numbers to react to. There's Tech Mahindra, there's Axis Bank, and both were weak set of numbers. So I'll keep my eye out on that. Revenues under pressure for Tech Mahindra. The management saying that the quarter was challenging. For Axis Bank as well, the NIMS is the lowest that we've seen in the last 3 quarters. Of course, the street will also react to M&M buying the 3.5% stake in RBL Bank. And in that context, there are some concerns on the capital allocation policy that M&M has done. There was no intimation of this stake buy. So is it an issue of corporate governance? Maybe the stock could be under pressure today. I'm watching out for that. In results to watch out for today, there's ACC, Nestle, Bajaj Finserv and Bharat Electronics that will be reporting numbers. So lots to talk about. We have our hands full. But for now, Nigel, looks like the bulls have it. They're going to, rain or sunshine, whatever happens, the bulls are on track to reach new highs.
Well, that's right. But, Sonia, I'm a little bit worried about these 2 results that came out from 2 pillars of the market, IT as well as banks. You have Axis Bank from the banking space, and from the IT pack, you have Tech Mahindra. So how do the bulls, they combat both these 2 sectors will be interesting in today's trading session. But today is going to be a good day as it is, because we are on course to register the 4th straight series in the green. And that's not happened all the way since May 2017. Last few series have been good, and the chart should come up for you. As of now, we're up close to around 800 points in this series, and the previous 3 series as well were pretty good. That chart should come up for you on the screen. Now, the Nifty Bank, that seems to be in a bit of a consolidation phase. For the last 5 sessions, it's been in this range of around 45,600 odd to around 46,370 approximately. So in that range is what we've seen. And yesterday it formed an inside candle day. What is that? The range was even narrower. If you look at the high and the low of the previous session and look at the high and low of yesterday, well, it's a little bit narrow out there. So it was an inside candle day for the Nifty Bank. Is it done with this consolidation? Can it hold on to the lower end of the range? Well, that will keep the bulls quite happy if we don't see the break at the lower levels. What do the FIs do? Well, they added long positions going into the expiry day, close to 7,000 long contracts odd, close to 3 longs added for every 1 short position. And now the long positioning is at around 67%. On the option side, what's encouraging is they wrote more puts than calls. And the 19,750 put, well, that was very active yesterday. Added close to around 45 lakh shares. Premium were there, close to around 44 rupees. So given that that saw some bit of writing, well, and you have at that 19,700 put call, the PCR only for that strike is 2.8. That's indicating that the bulls believe this 19,700 level will hold out. So support comes in at 19,700. For starters, the gift nifty suggesting we start above that resistance. But yesterday we did a U-turn from close to around 19,840. So sustaining this gap up is going to be crucial. And as I mentioned earlier, you have 2 results that are disappointing from the banking and the IT pack. So let's see how that weighs on the Nifty. But we need to sustain this gap up and then take it from there.
Okay, let's see if this gap up sustains. For now, it looks like it's going to be a very, very good start. We have lots of commentary coming in through the course of the day. First up, Sanjay Mukim of JP Morgan says that the Nifty valuation is close to pre-COVID highs, while the earnings revision remains negative. He says banks continue to be well placed where relative valuation has improved. They prefer ICICI Bank, HDFC Bank, SBI and Bank of Baroda. He says IT appears inversely placed with slowing earnings downgrades and elevated relative valuations. He adds that staples are amongst the best defensives when market is weak and they prefer HUL and Marico. Staples along with two-wheelers should benefit from the improvement in consumer sentiment. Sanjay adds other sectors they like are real estate where they prefer DLF and hospitals where they prefer Apollo Hospitals. They are underweight discretionary stocks.
Well, let's get you some money market views now as well. This is Parul Mittalson of Standard Chartered Bank, who says that the dollar INR is continuing to consolidate in a tight range amid a brief slip to sub-82 levels. She says rise in oil prices, slight uptick in dollar and US dollar purchases from PSU banks capped the downside in the USD INR. She expects the pair to trade between 81.7 to 82.2 next week. Adds that the dollar eased somewhat post a balanced FOMC guidance, and the focus now shifts to ECB, Bank of Japan decisions and, of course, direction for oil prices.
All right, and on the bonds, Parul says domestic rates moved in a tight range ahead of the key central bank meetings, along with worries of rising oil prices and the 6% July CPI print. She says the FOMC hiked rates as expected and turned data dependent. Her research team now expects no further rate hikes. Next week, she expects the 10-year benchmark bond yield to trade in a range of 7.05 to 7.20%, with global rates, oil prices and domestic food prices as key market drivers.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit. That's a special top 10 segment that will come up for you. And we'll just highlight the stocks for now. We're looking at RBL Bank, Dr. Reddy's, Tata Consumer, Colgate, Marico, Vesuvius, all of them in the back of positive news flow. On the flip side, you have Axis Bank, Sun Pharma, Tech Mahindra, and RVNL that will be reacting to negative news flow.
Okay, well, Robert Sockin is global economist at Citi. He's joining us. Robert, good to have you with us here. Thank you very much for your time. This is, I mean, I think more dovish than hawkish, right? Robert, how are you looking at it, the Fed policy and what it means for markets from here?
It's a great question, and thank you for having me. I think Chair Powell's goal today was to mostly emphasize a somewhat neutral position. The hike that we had today of 25 basis points, widely expected by analysts and by markets. And the key was, well, how would they frame that hike and how would they frame the outlook going forward? And I think our expectation, the way Chair Powell played that, was that he said, look, they're data dependent from here on out. They haven't made any decision based on the current data they're seeing in front of them. And they have 2 more months of data until the next meeting to be able to judge that. So I think some people were looking for Chair Powell to signal definitively that they would pause at the next meeting. He did not do that. He left every meeting open, but said that it's going to be very data dependent. And even though they've gotten some encouraging inflation data of late, they really want to see how data evolve between now and the next meeting. So I think I would describe it as Chair Powell was mostly successful in kind of striking a neutral stance. I think it comes down to the data, and if someone were to argue with me that the Fed was done, but they had a dovish view on the data, I think that's very reasonable. We think that they're going to end up pausing in September, but there's going to be enough persistence in inflation to lead them to hike one more time in November. So I would describe the meeting as largely as expected and mostly kind of a neutral stance out of Powell.
So what does this mean for asset classes like equities, Robert? I know you do track the economy widely, but on the equities front, do you think that the markets globally, as well as a market like India, could continue to move higher as we perhaps get to the start of what could be a rate cutting cycle at some point over the course of the next 12 to 18 months?
I think this has the potential to be very positive for risk sentiment and very positive for U.S. asset markets and global markets, depending on how the data evolve from here. We recently put out our global outlook last week, and a lot of the themes that we're seeing in the U.S. we're also seeing globally, which is global growth and U.S. growth are proving more resilient than expected. Most of that's coming from the services-based economies and services sectors. But at the same time that growth is resilient, you are starting to see this disinflation narrative. Goods inflation's come down significantly, food and energy's come down significantly. And now it becomes a question of, are we going to get that disinflation in services? And we've had some good data in the U.S., as Powell noted. We've also had some good data globally for services inflation. Now it's still running too high. But I think we're at a point, not just for the Fed, but for many other central banks as well, maybe we're getting to the point where they don't have to do more. And, the probability of softer landing scenarios have gone up, and maybe they can start cutting rates sooner than we expect. Our base case is still that the Fed does more, the ECB does more, the Bank of England does more, and they're going to hold those policy rates at high levels until the middle of next year. So we still think that there's a lot of space for people to reprice what central banks are going to do, and that inflation is likely going to stay sticky going forward. But we're at a point, and Chair Powell really emphasized this, where the data could surprise us and break in a more positive direction, and that could mean looser policy sooner than expected. That would be very positive for the stock market, not just in the U.S. but globally.
All right. Hi, morning, Robert. If I got that correct, you're factoring in higher for longer. So how many more rate hikes do you think the U.S. Fed could deliver? And also, what do you make of the commentary on recession? from mild recession, now they seem to be pushing that. There's a change of stance out there as well. So comments on both these two.
Yeah, it's a great question. So yes, exactly. We're higher for longer. We still think one more out of the Fed that they deliver in November. I would say, and this is true, this is my view of the Fed, but also other major DM central banks, that whether they're done for here, after, let's say, the most recent round of hikes, even if they don't do any more from here, I still think the bar for cutting is very high. And so even if we're at the Fed's terminal rate, I think we're still in a higher for longer world where the bar for cuts is high and they hold those high policy rates for an extended period. In terms of recession, it's really quite striking. We've been shifting out our call for a U.S. recession over the last several months. Originally, we thought it would start in Q3. A few months ago, we shifted it to Q4. And this month, in our most recent outlook, we shifted it to Q1 of next year. And you can also tell that story for a lot of other economies around the world. We thought that the UK would be softer than it is right now. We think that recession got pushed out. And a variety of economies, Canada, Mexico. And so, we are seeing more resilient data. Our view is still, if you look at the U.S. and some other major economies, you're going to have to see a significant loosening in labor markets in order to break this very high services inflation that we've seen. So even though we've been shifting out the calls for recession and the calls for low growth, we're still holding on to that because we think that's what's necessary to crack inflation. But as I said, some of the services inflation data has been looking better of late, and maybe you could get services inflation come down much lower without a significant loosening in labor markets, a significant slowdown in growth. Historically, that would be very unusual, but this cycle has been full of surprises. So, maybe we'll have some more going forward.
So just one final question, since we're talking about growth, where do you see India's growth trajectory from here on? I mean, IMF recently raised their India growth forecast to about 6.1% on GDP, and now they expect it to be the fastest growing economy in 2023. Would you concur with that view? And what would the comparison be with China?
Yeah, no, it's a great question. Actually, I was going to bring up China in that question before you mentioned it. Yeah, we have a very positive outlook on India as well, consistent with the IMF. We think it's in a strong growth position. Actually, if you look around the world last year, the best performing economies were in Asia. And that still holds true in our forecast this year. You're seeing a lot of economies, India, but other economies throughout Asia have performed much better in this cycle, have not had as extreme of inflation pressures, have not had to tighten as much, and growth has held up relatively well. So we're pretty positive on India. And I think it's an interesting comparison, as you said, to China, because China has been going in the other direction in our forecast. So we, a few months ago, had China growing at over 6% this year. We marked it down to 5.5% a few months ago, and in this forecast round this month, marked it down to 5%. So China's been going the other direction, while India, I think, has been having stronger prospects. I think for China, 5% is probably the floor growth rate for this year, because we think you're going to get a range of stimulus measures to come out of the government in coming weeks and months. And if growth is running even weaker than 5%, we think they'll just ratchet up the stimulus. But China is certainly in a much weaker position right now than India, and has a lot of other structural issues to deal with, such as turning demographics, difficulties within the property sector. So,
Right.
I think over the next decade, this is going to be one of the key questions. How does India grow relative to China as the other major large emerging market?
Sure.
And I think when I look at the potential growth rates of the economy, I would say the prospects are much stronger for India in the near term than they are for China.
All right, we'll leave it at that. Robert, thanks a lot for joining in and speaking to CNBC TV18. Let's slip into a quick break. On the other side of the break, we have plenty of stocks to talk about. Our entire list of top 10 stocks coming up in a bit. Welcome back to Bazaar Morning Call. Let's begin the day with a lot of stocks to talk about, and our entire research team is joining in for that. RBL and M&M will both be in focus after both the companies confirmed to CNBC-TV18's news break. M&M has gone ahead and bought 3.5% stake in RBL Bank. Nisha joins in. She broke the story. So, Nisha, congratulations on that. She gets us all those details. Over to you.
Thanks so much, Sonia, for that. Yes, late last evening, after the market closed, both the companies, RBL Bank as well as Mahindra and Mahindra, had given a stock exchange clarification on our news break and confirmed to it. Now, what Mahindra and Mahindra has said is that they have bought 3.53% stake in RBL Bank, and that, remember, is done for 417 crore rupees at 197 rupees per share. Now, remember that this particular stock price is on the higher side if you really look at the 1-year chart, and the stock closed at about 52-week highs. Now, what I want to mention is going to be a two-part important thing. First, M&M has more importantly cleared in that notification that they may increase their stake up to 9.9% stake from 3.5% right now. That means there could be more buying by M&M in RBL Bank. That could spur up and keep the momentum going on that particular counter, and it could be in the green. But on the other side, Mahindra and Mahindra will have to articulate the strategic intent with which they have made this investment, and what is the nature of this non-core investment for an automaker, and why are they going up to 10% and investing the cash that they have on their books. So capital allocation and the strategy will need to be articulated to the markets, and Mahindra could see some concern on the stock on the basis of the articulation not being there as of now.
Absolutely. That's a very important point. So perhaps, we could see M&M in the red, because earlier they had said that they have a target to get to an 18% ROE for all their businesses, and they want to exit a lot of the non-core investments. So this goes against their earlier capital allocation policy. So that's why perhaps the street would want to also get some answers from them on why they're doing this.
I think the numbers are tomorrow as well,
yes.
Right? So, all right. So we'll keep an eye on both those two stocks. But let's hop across to Abhishek. He's here to tell us about Axis Bank. Well, Abhishek, a bit of a disappointment on the NIMs as well as an increase in the watch list.
Well, operationally a weak quarter. The decline in net interest margin is expected for all the banks. However, this has been lower than the expectation. So, expectation was of a 20-22 basis point, but it's declined only by 10 basis point on net interest margin. So, the bad part about the result is that it is one of the worst performance amongst peers with respect to core operating profit growth. So, core operating profit has declined by 8.7% quarter on quarter. Remember that Kotak Bank had seen a decline of 6.74%. HDFC Bank had declined by 0.8%, while ICICI Bank saw core operating profit growth of 0.15%. It is perhaps the only lender, as you mentioned, that has seen increase in watch list. Watch list in absolute value increased by 5.3% and now forms about 0.68% of the loans. Net interest margin is the lowest in last 3 quarters on expected line that we are seeing in the industry. Operating profits have declined quarter on quarter for second quarter in a row. So overall operating profits have declined by 3.9% quarter on quarter, which is the weakest growth that you are seeing in last 4 quarters. P&L, both the NI and PAT is below our poll. The good part about the result is that they have seen a loan growth of 22.5%, courtesy the Citi acquisition that they have done. Ex of Citi, the numbers look weak. Gross NPA ratio is the best in last 32 quarters or 8 years, and it has come in at 1.96%. Back to you.
Okay, thanks a lot for that, Abhishek. There's also Dr. Reddy's and Sun Pharma on our radar. Ekta is here to tell us more about that. Ekta, morning.
Morning. Well, Dr. Reddy's came out post-markets and it was a good set of numbers. Revenue came in at around 6,738 odd crores, better than our expectations. Margins came in at 31.7%. The street was anticipating 25.8%. Profit at around 1,400 crores versus expectations of around 1,041 crores. The US sales were the key driver, came in at around $390 million versus estimates of anywhere up to $370 million and versus $310 million in the previous quarter. India on an adjusted basis for one-offs was up in single digits. IIFL, however, says that they estimate $50 million of a Q-on-Q increase in the Revlimid generic sales. So that was the key contributor this quarter in terms of the numbers. And it has contributed 40 to 45% on an overall EBITDA from Q2 to Q4 of FY23. and valuations are at around 28 times to FY25 core earnings. So that's probably going to be the chink in the armor for Dr. Reddy's, that despite a good set of numbers, the stock has run up 37% from its 52-week low. It's already trading at punchy valuations, so the street might not see further upside because Revlimid generic is a limited competition opportunity. It will only last till FY26. Now coming to Sun Pharma, it will be in focus on account of Taro numbers, which were a complete disappointment. Sales were just about flat on a year-on-year basis. It was an operating loss of $7.9 million. Adjusted for one-offs, the operating loss was $1.7 million. It was just about a 0% margin, and net income came in at around $10.1 million. Elara said US reported exceptionally poor Q1 numbers, that is Taro, and it contributes 4 to 5% of Q1 FY24 and FY24 consolidated EBITDA estimates for Sun.
All right, Ekta, thanks very much for that. Well, I think now for the weakest earnings set that we'll address this morning, and that's from Tech Mahindra. We've had a few IT disappointments, but this was something else. Rima is here with details. Rima, morning.
Hi, good morning. It's a big miss. Revenues for Tech Mahindra have fallen by more than 4% on a quarter-on-quarter basis. Their key communication vertical has seen a revenue decline of 9.4% on a quarter-on-quarter basis. Margins have collapsed to 6.8%. There is a little bit of a one-off in the margins, but even then, even if you account for that, margins are much, much lower than what peers have reported. Deal wins have come down by nearly 40% on a quarter-on-quarter brokerages, deal win on a quarter-on-quarter basis, and brokerages have slashed down their EPS estimates. UBS cuts it by 19% for this year, 10% for next year, while Nomura lowers FY24 EPS estimates by 10%. So it's a big, big miss on revenues, margins, deal wins, all-round miss. Back to you.
All right. Thanks for that, Rima. In fact, we'll have the management of Tech Mahindra at 8:35 a.m. to talk about the past quarter's numbers. Well, let's hop across to Mangalam to tell us about some of these FMCG companies which declared numbers. Mangalam, tell us about Tata Consumer as well as Colgate. Colgate was sparkling, right?
Colgate indeed was sparkling, but let's tell you about Tata Consumer. In fact, the Tata Consumer numbers were absolutely in line with what the street was anticipating. If you just take a look at the revenues, EBITDA and net profit, no difference whatsoever from what the CNBC-TV18 poll was. The internals, however, for Tata Consumer tell you the India business was doing a lot better. India grew at 15.5% as against street expectations of 10 to 12%. The international business was rather weak. It grew about just 7% versus expectations again of 10 to 12%. In India, the sparkling spots were the foods business that grew 24%, and Narishco. Despite adverse weather conditions, Narishco grew by about 60%, and now as a result of which growth businesses account for 20% of their overall sales as against 15%. So that's a positive. Despite inline set of numbers, see green on Tata Consumer. Now Colgate, this is the best FMCG result in the large cap space we've seen so far. A big beat on the revenue, 1,300 crores versus street expectations of around 1,250 plus. EBITDA coming in at 418 crores, and this despite the company not letting down on any ad spends. It was largely led by premiumization and gross margin expansion, and the net profit coming in at 275 crores versus expectations of 250 crores. This despite an exceptional loss of 20 odd crores. The company said the toothpaste business recorded a high double-digit sales growth, and they're seeing early signs of recovery in rural India and pretty optimistic of the growth path going forward. So Prabha Narasimhan's strategy is working for Colgate finally.
All right, absolutely. Thanks very much, Mangalam, for that. So that's the Colgate set. Now, RVNL is the next one we're going to talk about. The stock's doubled this year, 100%. And I guess the government wants to book some profits. There's a OFS. Vivek is here with details. Vivek, morning.
Well, absolutely right. It's an opportune time for the government to pare its stake in the company and help it meet the minimum public shareholding norms. Now, remember, the news is that the government is looking to pare 5.36% stake in the company, and the route that they've chosen is the offer for sale route. Now, this particular OFS has two components. One is the base size. The base size of the OFS is 3.4% of the total equity, and the government has the option of choosing the green shoe option for selling an additional 1.96%. The floor price for this particular offer is 119 rupees a share, which is close to 11% discount to yesterday's closing price. Remember, the government held over 78% stake in the company at the end of the June quarter, expecting a mild red in this particular name on the back of the significant discount being given for the OFS.
Hey, thanks a lot for that. Well, Mangalam is back with us to talk about Marico. Mangalam, how did it look?
Well, Marico actually has gone ahead and bought 58% stake in a company called Satya Nutra for about 369 crores. Now, for those interested in the health and wellness food space, Satya Nutra is the one that owns the plant-based protein brand Plix. And it's a good acquisition, fits right in their digital and health food sort of strategy, and strong growth is what the company has shown. In fact, FY21 revenues for Plix were just around 11 odd crores, and FY23 it surged all the way up to 106 crores. So Marico is likely to scale that up. I've been a user of the brand, so I can vouch for the quality of Plix for sure.
All right, Mangalam, thanks a lot for that. Well, I'm looking at Vesuvius, and this stock is going to do very well in today's trading session. It trades very expensive, but these numbers are absolutely blockbuster. On a year-on-year basis, the revenues were up at close to around 20%, EBITDA was up close to around 70%, margins at around 17.2%. I haven't seen that in multiple years, and if my memory serves me right, I think this is the highest margin since 2018 itself. So the margins look very, very good. The profitability as well got a leg up, was up close to around 80%, and they're sitting on cash of close to around 600 crores, which is 11% of the current market capitalization. What's giving you further confidence of the refractory business is that now they're laying out capex of 88 crores odd. They're looking at doubling their capacity at their Andhra Pradesh unit. So it gets a thumbs up. Valuation-wise expensive, but the stock will do well because these numbers are very, very strong.
Okay, we'll keep an eye out on Vesuvius India. Here's a quick recap in case you missed out on any of the stocks. Stocks with positive news flow: RBL Bank, Dr. Reddy's, Tata Consumer, Colgate, Marico and Vesuvius. While stocks with negative news flow: Axis Bank, Sun Pharma, Tech Mahindra and RVNL. So a lot of big nifty companies disappointing with their numbers. Let's take a quick break. On the other side, we'll pose all of these questions to Anand Tandon. What do we do with some of these names like Tech Mahindra and Axis Bank? More on that in a bit. We'll also connect with the management of Tech Mahindra to find out what went wrong in this quarter's number. Stay tuned. All right, the big stock in focus on the downside today could be Tech Mahindra. It posted a very weak set of Q1 earnings, well below what the street was estimating. The constant currency revenue has declined over 4%, while margins have come in at a multi-quarter low. Let's get the management on board. We're joined by the top team now, MD and CEO Mr. C.P. Gurnani, CFO Rohit Anand, and we also have the Managing Director and Chief Executive Officer Designate Mohit Joshi joining us. Gentlemen, morning to all three of you. Mr. Gurnani, let me start with you because, the revenue growth has deteriorated materially for you. Revenues have declined over 4% quarter on quarter. I agree that this is a very challenging environment for the sector on the whole, but can you explain what happened in this quarter and what would the read-through be?
I know it's been a very tough quarter. I know this is in a lot of ways, minus 9.4% quarter-on-quarter growth, degrowth with CME clearly shows that many of the transformative deals have hit sudden breaks. I can only say that we have since then had a further dialogue with most of the CME clients, and we believe it's a temporary blip. But the moment you have a minus 9.4% and one of your major verticals, obviously it impacts the rest of the company's performance, it impacts the cost equation, it impacts the supply chain equation. I think that was a major reason. And obviously there were some more seasonal trends like Comviva, usually a slow quarter for them. There were one or two client situations where, one of the clients hitting a bankruptcy, and as per our internal guidelines, we tend to be more conservative. So we have taken into account the customer bankruptcy and hence written off on the books right now, some of the or made provisions right now. So all I can say is that, yes, it has been a tough quarter.
Well, it certainly has been tough. Gentlemen, good morning to all of you. CP, but it's not telecom which fell, right? Even other verticals like retail, BFSI saw a decline in revenues. So what happened there? You talked about a sudden stop to transformational deals, but please explain.
No, I think on enterprise, it has been more status quo. I would not worry too much on this because minus 0.5% quarter on quarter is almost status quo. So I think enterprise is holding good and their pipelines are reasonably strong. I want to reiterate, it's a blip. It is a situation from where I think Tech Mahindra will recover reasonably fast. And Tech Mahindra is conscious that the client's needs for cost transformation and business transformation continue to be high. Our service offerings are well poised. Our investment in people are well poised. We have actually doubled up our investments in AI and some of the new technologies like quantum computing. So overall, I am more positive about the future despite of few headwinds.
All right, Mohit, let's come across to you. Well, you've just come on the board at a tough time. What would be your top priorities?
Over the past few weeks, I've gotten a sense of the company, and I've certainly recognized the very strong connection that we have with our clients, the very strong connection that we have with our employees, and the strength of the offerings that we have. Beyond this, as has previously been articulated by CP and the others, we are working on a plan to strengthen our presence in certain markets and our presence in certain verticals, and to build on the marquee list of clients that we have. Clearly, part of the transformation also needs to be the cost transformation so that we can work on the margin improvement plan. But this is all very much something that will be fleshed out in the months and the quarters to come. It's too early for me to give you a sense of the top 3 things that I'm going to be working on. It's only been 5 to 6 weeks.
Okay. Rohit, the EBIT margins at 6.8% is a big concern for the street. We've never seen such low margins. Do you see any recovery at all through the course of this fiscal?
Yeah, it is a low margin quarter, and the way to think about it is from last quarter to now, there's a 440 basis point change. 0.5% is driven by Comviva seasonality that we knew and anticipated. Broadly, 2% of the drop is driven by the revenue drop that we saw, which was more aggressive drop than we anticipated. And then the 2% is driven by one-timers. So we've, as CP mentioned, provided on a conservative basis certain developments with one of our customers on bankruptcy filing. So we've provided all our exposure there. So just basis the accounting guidance. So that's a one time for the quarter, and that's the 2% impact. So hence, when you look at it, all of that together cumulatively is adding to a 440 basis point reduction.
No, got that. Rohit, I mean, could you tell us what is the outlook on margins from here? What levers do you have to improve them?
I think we continue to work on levers as we move forward. Obviously, the one-off will go away. So as you think about the next quarter, that changes, adds back to the margin. And then, going forward, we have multiple operating levers that we've continued to drive on. We've articulated that our subcon cost is 14% as a percentage of revenue. We've consistently got that down from 16% to 14%. And we feel that that's continued to be an area where we can bring reduction over the next few quarters to bring it down. So that will give us some benefit. And there's other operating areas around juniorization, pyramid correction, offshoring that we'll continue to work on as we move forward, including a lot of large deals execution that gets better as we reach more maturity states there. So those are the levers that we'll continue to drive. And some other actions that I'd articulated to continue to pursue that on divesting certain non-strategic businesses. So we'll continue to work on that as well.
Well, Rohit, deal wins have dropped by close to 39% on a sequential basis. I want to get a sense of the mood. Are clients just not willing to sign on new deals?
Yeah, so deal wins is a reflection of what we're seeing in terms of decision making with the clients that's getting delayed, reflecting in the numbers. I think when we look at the pipeline is quite robust. It's widespread across vertical and regions. We feel that the quality of the discussions with the customers are getting slightly better as we move forward. So we're anticipating that closures will, from a timeline perspective, while it's worsen off from where a deal to close that used to have is worse than what it was 6-8 months back. But as we move forward, we expect some recovery there. And with that and pipeline looking what it is right now, we feel an improvement should happen gradually as we move forward. Maybe not a huge V-stick, but more a gradual recovery in terms of deals.
All right. Thanks a lot, gentlemen, for joining in. Hopefully, things look up in the coming quarters. Well, let's get in our market expert then. Anand Tandem joins us on the show. Hi, Anand. Good morning. Well, we're just hearing out the management of Tech Mahindra. The numbers are absolutely no two ways about it. They're disappointing. Valuation gives some bit of support. The stock will get pulled back. Your view of the stock?
Well, I think you kind of summed it up. I don't think there is anything particularly attractive at this level. And also, I think, the market had started to, except for the last couple of weeks, perhaps, had taken the stock up along with the rest of the small rally that we witnessed in the IT sector. From this level onwards, I would expect the market to react negatively near term. And, you would want to wait to see the numbers turn. Clearly, Tech Mahindra is not the bellwether stock for the sector. It will require an Infosys or somebody else to come back and say that they are beginning to see better inflows of orders and actual execution before you want to rush in. And I would imagine Tech Mahindra will lag that. So there's a lot of time before one needs to look at it from an investment perspective.
Okay, I have many more questions for you, including what one should be doing with names like Axis Bank now. But before we do that, let's take a break. And before we take a break, let me tell you what's lined up in the next half an hour of the show. Anuj will be with us in just a bit for a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. And before the market opens in CNBC TV18 Stock Board, we'll highlight all the top stocks to focus on in the news today. Stay with us.
Okay, welcome back. There's 11 minutes to go for the pre-open session. Anuj is here, as always, with a quick check on things in terms of how he's looking at the trade forward. Anuj, morning.
Morning, Prashant. You know what? I'll just give you some data and present it in picture form. Let's look at the Nifty highs, the Nifty lows first, and Nifty close. What was very interesting is that for last 4 days, the Nifty was making a lower low from 19,758 to 19,700, 19,658, 19,600 on an average by about 50 points. And yesterday, straight away, 100 point higher than the previous day's low. I think indications came on July 25th itself when the close was better than the previous day's close despite the low being lower than the previous day's low. I think that was the indication the market was trying to make some kind of a bottom, and yesterday has confirmed that this number over here, 19,616, could very well be the bottom of the current swing for the Nifty. Now, today's expiry, so I look at the options data and give them a lot of importance. Now, this is the Nifty options pyramid. What you will need to focus on is these two numbers, 19,700 and 19,800. On 19,700, you have 3 times puts compared to the calls. But on 19,800, it's the reverse. There's too much of call writing. If you start to take this level out, I think then they could be very interesting. Of course, 19,900, 20,000 perhaps may not come in picture. Who knows? Now, what about the outlook for the day? I think I'll break it down sectorally. All large banks are out with numbers except SBI now. Axis numbers, let's see how the market reacts actually. That I think is more important because the bank nifty has shown some strength. IT numbers are weak, of course. So let's see how much lower this sector can go. But two sectors that I'm focusing on, I think metals should do well because of this China stimulus. I think pharma, after Cipla and Dr. Reddy's numbers, I think pharma could be the space of the day today to track. The US pricing recovery, I think, is a big theme. But you know what the market needs? The market needs one of Reliance or HDFC Bank to fire to take it towards that 20,000 mark. As far as today's outlook is concerned, well, 19,825, yesterday's high, and 19,843 based on options. So the strategy would be the same. If you start to cross 19,843 and trade above that, I think that would lead to bigger short covering. At lower levels, the support is 19,778, which is yesterday's close, and the bigger support is 19,716. But my broader view is that the markets have gone through the correction, that correction is over, and that upward journey towards 20,000 has once again resumed.
Okay, so our road to 20,000 once again opens up for the market. Thanks a lot, Anuj. Have a good day. Well, Anand Tandon is back with us to talk about some more stocks. Anand, I wanted your thoughts on what an M&M investor should do now. I mean, this stake buy of 3.5% in RBL Bank may not go down too well with the street because, you know, some concerns on capital allocation have resurfaced. But your thoughts on how one should approach it?
So let's keep that aside for the moment and look at the core business. The tractor itself, nothing great. The SUVs, which have been the mainstay of the business. We cannot have a situation where Maruti is going up because they're going to gain market share and Mahindra is especially in the SUV segment, and Mahindra continues to go up because they will also gain market share. Somebody has to lose. As the leader, Mahindra has got a challenger coming in, which is very powerful in terms of its distribution and so on. So if you look at the core business of Mahindra, I think the technology, of course, we have just seen what it has done. I don't see where the next trigger will be. Asset allocation decisions obviously were one of the reasons why Mahindra stock went up, because they said that they were earlier moving from a pooled structure to actually being able to create separate silos and allocate capital a little more sensibly with a focus on ROE. If that goes away, obviously the re-rating that had happened will become a question. So overall, a tough business environment for most of the sectors that they are operating in, valuation which is higher than their average, and a recent decision which doesn't really make too much sense. And I don't see what the next upside trigger is.
You know, guys, I just want to make one point. In RBL's case, right, the big thing is that RBI has never in its history, and I think, if you remember the applications for banking, because universal banking licenses are on tap now, right? So you can apply. But consistently, RBI, it's not, I don't think it's written down somewhere, but it's pretty clear that they're not comfortable with corporates owning any significant share. The limit is 9.99%. I think 2013 or 14, when they introduced and invited applications, there were corporates who applied, but nobody got it, right? So I think in RBL and M&M's case, the point is they can, and I think as the M&M release says, under no circumstance will we go above 9.99%. The point is perhaps they cannot. I mean, history suggests that they cannot. Right? I mean, the RBI is just not comfortable. So what will they do with just 9.99% if that's where they will stop? I think that's the question for the bank. If they can't take, I mean, if they're not going to be able to run a bank and, at 9% or just under 10%, what's the game plan from a Mahindra stock market point of view? I think that's going to be a question to consider. But even to get to that, I mean, beyond 5%, they need RBI approval. It's something to keep track of. Anand, good morning. Just a quick word on Bajaj Finance. What did you make of it? I'm seeing some earnings upgrades. I think Morgan has upped their earnings estimates small, 3% or so, and a few other brokers as well. Go on.
Well, obviously, that's been a company which has continuously surprised on the upside in terms of execution and so on. Earnings upgrade is something that you've kind of got used to. The valuation or concern has always been there. And despite that, obviously, the market continues to believe that they can continue to grow. Now, the kind of size that they have reached, will make it the growth that much more challenging, and to be able to continue from here to be able to show the same level of growth, in my view, will be a little difficult, especially with the new competition coming in from Jio. And you can assume that Jio will also be, now that they are spinning it off and looking at it as a separate business, will be also fairly sharply focused in terms of gaining market share. They don't do anything in half measures. So from here on, extremely top-end valuation, challenging the top-end execution that we have seen, and a new competition means that the NBFC space, at least on the consumer side, is likely to face fairly significant competition. So I would, if you have to be in financials, why not just stick with a bank which can grow at 20%, 18 to 20% year on year, and is one of the largest in the country?
Anand, since we talk about banks, NBFCs, tomorrow MMFSL, they come out with this set of numbers. Earlier I was thinking that Mahindra comes tomorrow, but Sonia tells me that's later. If Mahindra had to do this entire thing, why didn't they do it through that entity? Because that's as it is into finance. Just wanted your thoughts.
Well, the question is, they had a stake in Kotak, right? So you've already seen, the Kotak Bank do whatever it is. It's not as if Mahindra contributed much to it, other than the fact that in the initial stages, maybe when Uday Kotak was not that big a name, therefore at that time the Mahindra Group may have added some reputational advantage, but that has long gone. Trying to make it a portfolio investment, nothing great. Trying to look at it from the point of view of synergies, you don't really need to take equity to be able to tie up with a bank, to be able to distribute product, etc. I'm not sure what they're trying to achieve.
Okay. Let's see how the street reacts. We'll know in not too long from now, about 15-20 minutes, we'll know what the market's verdict is. And then perhaps we'll take a call from there. Let's take a quick break. On the other side, the pre-opening rates. Later, we'll get you some excerpts from our conversation with the Dr. Reddy's management on their Q1 numbers. So do stay tuned in for that. Welcome back. We're actually getting into the pre-opening rates, and it's very interesting. What's happening with the Nifty is it's slightly under pressure, down about 40 odd points. The big drag is coming in on M&M this morning, down almost 7.5%. So keep an eye out on that. At least in pre-opening, the indications are that it could be a deep slash. Axis Bank is down almost about 5% after a weak set of numbers, and Tech Mahindra is the other one that could be under pressure. So we'll talk more about all of these stocks in the news. Mitesh Thakkar and Sudarshan Sukhani join in. Gentlemen, morning to both of you. Sudarshan, do you think that this is just, a bit of a pause before the market takes the next leg upwards? I mean, we've been making that point ad nauseum. But if yes, what should the strategy be for today if the market opens in the red?
Yeah, good morning. See, it is a pause because there is nothing to suggest that the markets are turning around. But a pause can take its own time. And, I've explained earlier, a pause really means a choppy market. If traders enter a choppy market, they literally get chopped around. So the trade here is only to wait for significant intraday dips and go long in the Nifty. Ideally, you want to exit intraday also, but if you do carry a position, keep your volumes low. And don't extend your positions at more than one day, overnight that is. So the real trade is to be patient. This pause will also end and hopefully will resume the up move, but those signs have not come yet. There's a trade still. Sonia is in the Bank Nifty. The Bank Nifty has gone into a small, narrow range consolidation. So if that consolidation breaks on the upside, which essentially means it crosses 46,000, I think there's a buying opportunity with a tight stop at 45,700. That's only for the banks. The Nifty is a buy on dips and stay quiet.
Okay, all right. Thanks for that, Sudarshan. Mitesh, what about you?
Morning. I've been advocating that we will possibly not go into correction, but more of a sideways consolidation. And I think I still maintain that view. Broadly, the gap which happened on Friday, which is between 19,900 and 950 zones, I think that will be the level which will be a very strong supply level now. And I think there's good support around this 19,660 mark. So I expect a 300-point kind of consolidation. the observation is supported by the fact that volatility indicators are turning sideways and flat. So my sense is that I think we might not make a newer high immediately, but maybe spend the next 3 to 4 sessions consolidating. And these observations are on the hourly charts. I think 3 to 4 days is what I expect as a choppy range bound kind of a movement, and therefore you would want to buy closer to 19,700 and try to take profits closer to about 19,900, 950.
All right, let's take the individual stock ideas then. Sudarshan, what is on your list this morning, and what do you do with some of these heavyweight names like Axis and Tech Mahindra that have reported disappointing earnings? How do the charts look?
Oh, for Tech Mahindra, the charts are actually nothing to talk about. You really don't want to touch it also. Axis, I would suggest that the dip can be used as a buying opportunity. The long-term charts, or let's say for a positional trader, Axis is a very attractive idea if it has a small correction, and that it should have. So it's really a buy for investors, for position traders. I have Lupin in my buying list. Lupin had a big, massive rally like many other pharma stocks. It went into a consolidation for the last 20 days. It could break from that. Buy with a stop under 920. Aditya Birla Capital, AB Capital has come in my list earlier. The stock seems to be getting ready for a big up move.
Okay, I think there's some issue with your video, Sudarshan. We'll come back to you. Mitesh, how about you? What would your list look like?
Yeah. Morning, Sonia. I have all buy list today. Indiabulls Housing is a buy with a stop at 122 for targets of 132. Manappuram Finance is a buy with a stop at 132 for targets of 142. Coromandel Fertilizers is a buy with a stop at 979. Look for targets of 1020 here. And Davar is the final buy call. Keep a stop below 569, 590 being the short-term target.
Okay. Gentlemen, good to get those ideas, those trades. Appreciate it very much. Manoj Muralidharan is with us, Vice President Derivatives at Religare. Manoj, good morning. So we get a gap up, strong looking screen out there. What do you do?
Good morning, Prashant. Prashant, I guess when we start the day, usually on Thursday morning, the percentage rolls in Nifty and Bank Nifty is around 50 to 51%. But this time we are at a good 66% for the Nifty and almost 60% for the Bank Nifty. So the major part, or we are ahead, at least in terms of when we are starting this day. But Nifty has more potential. I guess intraday there is a possibility of 19,900 on the spot, and eventually even the August 1st release, we are expecting Nifty might inch or go more towards a 20,200. We believe that that is where we might see some distribution or maybe the momentum fade. But as of now, we believe there is a good 300 more points in Nifty towards a 20,200. Sector-wise, we like pharma, and we are seeing good traction in cement and oil and gas as well. But stock-specific, I guess even for intraday, Cipla looks a good buy. You can enter that at 1060 to 1045. So should be the stop loss, and around closer to 1100 as a target. ACC also has seen good cash buying along with derivative return in the last 3 to 4 days. So we believe that this stock has a potential of almost 1960. That would be the target. We advocate buying it closer to 1910 to 1950. Stop loss should be closer to 1890 on that.
Okay, all right. Thanks a lot, Manoj, for joining in, and have a great day. Let's talk about some stocks that are moving around. One of the big movers in the market is Cipla. It's up 5% after the company increased its margin guidance. Ekta is here to give us more on that. She's also going to talk about Dr. Reddy's. Ekta, over to you.
Thanks for that. Well, yes, the surprise has been Cipla, because during the press conference, when I asked Mr. Bora a couple of questions about the guidance as well as the US business, he seemed to be much more optimistic in terms of these two parameters. So, for example, they've increased their margin guidance, or they're expecting around 23 to 23.5% in terms of margins versus around 22% earlier. US sales are estimated to be around $210 to $215 million on a quarterly basis versus $195 million in terms of a run rate earlier. The company has also not received any communication with regards to the Indore facility. So the expectation is that maybe it could be something adverse from the US FDA, but they are looking to transfer Advair generic, which is an inhaler drug file from that particular plant. Plus, they do have some 4 to 5 peptide launches in the near term, which are certain drugs in the near term expected to be limited competition. So things seem to be looking good for Cipla. Bernstein outperformed. They believe that the twin engines of US and India are firing for them. Elara has upgraded to accumulate from reduce. For Dr. Reddy's, the problem with Dr. Reddy's is the valuations. I'll come to that in just a second, but the revenue is done well. Margins are better than expectations. And all that has been fueled by the US sales, which have come at $390 million versus $310
$10 million in the previous quarter. And majority of it is Revlimid, which has really contributed, the cancer drug. It's a bit of $50 million Q-on-Q increase according to some analysts, and hence we could see limited upside for Dr. Reddy's today, simply because the stock is already at a 52-week high, trading already at around 20 times 1 year forward, so or on an FY25 basis. So it seems as though the best of it is probably already factored in.
All right, so let's listen in now. Thanks, Ekta, for that. Let's listen into a word coming in from Erez Israeli, the CEO of Dr. Reddy's.
The product contributed well to the numbers, as well as the rest of the business. We grew the base business beside Revlimid also in double digit. So overall, it was good performance across the board, not just dependent on this product, which did well. We completed and closed the deals already in April. So we had about 7 weeks of sales, which is added proportionally to the sales. We believe that we, give or take, we will be able to meet something between $90 to $100 million in a year during FY24 from this one. We grew double digit also without lenalidomide. And relatively to other quarters, we saw a moderation of the price erosion. We always said that this is area in which we are comfortable with the 25% because it allows us to give decent shareholder returns as well as to invest into the future. In the future, especially after the arrangement with lenalidomide will be different, and the proportions or the growth of the markets will be maybe different, plus the investments in the R&D, like in biosimilars, the margins may go down to the area of the 25%, in which we did. In the obviously during this period of time with the relatively very strong levers that we are coming, we will be above that guidance. I'm not giving a specific number, but what I can say that we will continue to see the same momentum that you saw in the first quarter.
All right, let's focus on Bajaj Finance. Yesterday it ended virtually at the low point of the day, but today it's up close to 2%. Abhishek joins us to fill us in with more details. Abhishek?
Well, Nigel, they've given a guidance as they always give in their presentation, but this time around, the guidance has become much better than what it was in Q4 FY23 for the whole, long-term guidance that they always give. So, gross NPA ratio is now, they are saying that in long term, it will be between 1.2 to 1.4%. Earlier was 1.4% to 1.7%. On the net NPA ratio, on the upper end, their earlier guidance was 0.7%, which has been brought down to 0.5%. But what is the best guidance is in terms of ROA. The lower end of the ROA now is at 4.6% guidance versus the guidance of 4% that they had earlier. And return on equity, both on the upper end and on the lower end, it's been increased by 2%. Brokerages say that they see strong 26% CAGR in profits over FY23 to 26. NIM will compress over FY23 to 26. That is about 40 basis point is what they are estimating in terms of net interest margin compression over the next couple of years. Encouraging to see management lift guidance is what brokerages have say. And JP Morgan has an overweight rating with a target price of 9,000 per share. Jefferies have increased the target price to 8,830 from 8,310 earlier. And HSBC is also bullish on the stock with a buy recommendation and a target price of 8,240 per share. Back to you.
Okay, thanks a lot for that. Well, Colgate is the other one. It's an all-round quarter one beat, strong double-digit revenue growth. Mangalam is here with more on that. Mangalam.
A sparkling set with no hidden cavities, an all-round beat coming in for Colgate. The revenue, the EBITDA and the net profit were above estimates, and the net profit was higher despite, the company reporting an exceptional loss of almost 20 odd crores. And the EBITDA was higher despite the company spending more on advertisements as well. So no let-up out there from the companies. And in fact, management commentary was rather positive as well. Toothpaste sales recorded a high double-digit sales, and they've seen early signs of recovery in rural India, optimistic about the future. The stock has already rallied about 23% in this year, but still at 43 times. It's at a discount to other FMCG peers as well. And as a result of which, Jefferies has upgraded their EPS estimates by 7 to 8%. And we've seen price target upgrades coming in from all brokerages, including the likes of Jefferies and JP Morgan.
All right, thanks a lot for that. Well, the other stock we're looking at is M&M. It is the biggest Nifty loser this morning. M&M, remember, has bought 3.5% stake in RBL Bank and may consider raising their stake in RBL Bank further up to 9.99%. Now, the reason the stock is under pressure is that, buying 3.5% stake is, of course, a non-core investment for M&M, and this could raise concerns once again on their capital allocation policy. M&M has not yet disclosed the rationale behind this stake buy, so we're awaiting more details from the management. They had earlier addressed their capital allocation policy very well. They have a target to get to an 18% overall ROE for all their businesses. They have grouped their businesses into A, B and C categories, and for businesses which couldn't deliver an 18% ROE, they exited those businesses. So now comes the question as to why have they gone ahead with this stake buy in a non-core asset without any explanation on what this does for their capital allocation. So this is the reason why the stock is under pressure. In fact, if we have Mitesh with us just before the market opens, Mitesh, a quick comment on M&M stock price?
M&M actually, Sonia, if you look at the history, has done extremely well in the last few months. And now I think, on the intraday charts, there is some sign of profit booking because we have had what I will call as a supply pivot double top formation at 1570 odd levels. In case we see a break below 1520, then I expect another 40-50 points to be shaved off here. I think this stock is also overbought with some negative news flow. I'll keep a close watch on 1520 as a support level.
All right, just heading into the market opening now. Thanks a lot, Mitesh. Have a good day. Market looks like it's going to open very strong this morning. The Nifty is up about 73 odd points. The Bank Nifty is the one that's charging ahead with a 220-point gain. And your top winners, of course, Bajaj Finance tops the charts after the company has raised their guidance. So looking pretty good over there. The guidance on asset quality has been improved this time. So Bajaj Finance up about 2%. And Cipla as well has raised their margin guidance. So those are the top gainers on the index this morning. First on the headline index, very strong opening. So the market, it seems, has digested that US Fed rate hike and now has moved on up about 50 odd points. 19,820 is where we're at. So let's see if this consolidation phase has ended and the market has resumed its upside. Straight to the top gainers, Cipla, as I said, margin guidance has been upped and the stock is up 5%. Bajaj Finance up 2% after raising their guidance. Infosys, L&T, a couple of other stocks that are trending in the green right now. And Axis Bank, the street actually likes some part of those numbers, so 0.7% higher for Axis Bank. In fact, it has company in a lot of banks. ICICI Bank has been gaining ever since its numbers. So that stock is in the green. HDFC Bank is contributing. And a couple of other financials like SBI Life are also in the green. So what's dragging the market lower? M&M now down about 4%. As I mentioned, capital allocation policy fears have resurfaced. So down about 4.5%. Tech Mahindra is the other one, very weak set of numbers, down 4% there. Tata Consumer Products down 1.5%. HUL Britannia, Nestle down about 0.3%. Nestle comes out with its numbers as well. So ahead of that, slightly tepid over there. Kotak Mahindra Bank just a tad bit in the red, nothing alarming. But M&M is really your top loser at the moment, down about 4.5%. RBL Bank, let's pull that one up and see how it is reacting to the news flow. The last time I checked, RBL Bank was in the green, but that too has now moved into the red. But plenty in the broader market.
Well, that's right, Sonia. RBNL, the government seems to be the best investor out there. The stock has run up multiple times. Now they're doing an OFS, so they're looking to sell some stake. That's why that's a bit of an overhang for a couple of sessions, down close to around 4%. I'll be interested to see what kind of demand comes in from there, because the sector's clearly got all the eyeballs. The other ones that are in focus is Olectra Green Tech. Last few sessions, it went from around 1,450 to around 1,100 approximately. Now it's up close to around 5% as well, so keep an eye out on that one. Suzlon, 2 sessions it was in lower circuit. I think now there is some release of that lower circuit, so that's holding with a cut of close to around 0.5%. But last couple of days, there was no exit. So let's see how that one goes from here. Vesuvius, as we pointed out, the numbers were very, very good. Volume's not very, very high. I think it's only around 35,000 shares that have been traded on both exchanges. Actually, now 50,000 shares, but those numbers look very, very good. Stock almost locked in upper circuit, and this is the second consecutive quarter that we're seeing a beat. I recall at the end of last quarter as well, the stock went up close to 20%. So that one gets a thumbs up. Godfrey Phillips, that one's up close to around 11%. So good going on that stock. And from the pharma packaging, Sonia mentioned as well, you have Cipla that's now flying away up close to around 7%.
Okay, well, 65 points on the Nifty is what we have, 19,845, and things are looking, pretty good. So take Mahindra and RVNL and Mahindra are some of the losers. By the way, look at AMC stocks, right? I mean, look at HDFC AMC. It is down 1.6%. It's coming up with volumes right now. Maybe we could look at UTI AMC, Nippon AMC, and a few others. I don't know if this has got to do with the announcement. Not really, actually. UTI AMC is, if anything, higher by a little bit. Nippon is the other one, which is going to come up on your screen. Tata Consumer is down about 1%. Jyoti Laboratories, which has had a fantastic run post the numbers, is coming up with a slight pullback as well. What else? I think Vesuvius Nigel detailed out, fleshed out quite nicely. 32.15, that's the big mover today on big volumes. It's limit up, daily limit up. BSC Limited is up 3%. It's coming up with large volumes for this point in the day, 790 on that one. I think we mentioned Godfrey Phillips. Electra, I think, was up 10% yesterday. It's up another 5% this morning. And Cipla is flying away. So the market likes Cipla. Revlimid, no Revlimid, that's the one-off which has contributed to bulk of the beat for Cipla in the US business. The market's bidding that stock higher at this point in time. Yesterday, names like Lovable, Rupa, Lux Industries, Dollar, the Innovate companies, they were all up between 8 and 12, 13%. And I can spot one of them, at least for now, Lux Industries, which is coming up with about a 6% pop at this point in time. Tangamail is another one where there is follow-up buying after earnings last couple of, 2 or 3 days before. So that's another one. Markets looking solid with about 75 points in terms of gains. Samir Arora is now joining us. He's founder and fund manager at Helios Capital. Samir, great to have you with us here. Thank you very much.
Hello.
Appreciate it as always. Samir, I want your thoughts on this, Mahindra and Mahindra RBL news flow. We reported yesterday that Mahindra has picked up, a stake in RBL, and it was confirmed. Both RBL and Mahindra confirmed it later, although Mahindra says that under no circumstances they will exceed 9.9%. Your thoughts in terms of what the motivation could be, and as an investor, how would you look at it?
The first thing is them saying that they can't own, they in no situation will own more than 9.9. I thought that is the RBI rule, isn't it? That it's the RBI rule that nobody can own without permission and things like that. And mostly RBI would not give, as per current my thinking or our thinking, that corporate sector can go into banking or own more than 10%. So it is more a rule rather than anybody's personal commitment. But I don't know, because I don't own M&M, but because of the history where they've in the past had poor corporate allocation decisions, that's why people are so sensitive. Otherwise, it could have been taken as use of excess cash or a treasury kind of operation. But when you buy a bank, it becomes a bit more sensitive because it needs so many approvals. Beyond 5, I think, again, RBI has to come in. So I don't know what is the angle, because as of now, we don't read that a manufacturing company can buy a bank or promote a bank.
Just one point, and we were discussing this earlier. They have Mahindra and Mahindra Financial Services, right? Now, generally, the understanding is that NBFC is beyond a point. I mean, the RBI doesn't nudge, but I mean, the conversion into a bank and things like that. Could there be that as an angle? But then that would have been done through M&M Finance, not M&M.
But that is one. But second is, I thought there are these two angles, right? Even if you have a NBFC, but you are owned by a manufacturing company or by a corporate, then what happens to that rule? So I don't think it is clear. It all is case by case, I would think. So it's beyond our normal pay grade, and we don't do complicated things to earn a living.
Well, we won't have to wait too long to find out. I mean, M&M's earnings, Q1 earnings, come out on the 4th of August. And I'm sure questions will be posed to the management on this stake buy as well. Remember, M&M in the recent past has exited all their loss-making and non-core businesses. So apart from SsangYong, of course, which they exited, a lot of them, whether it was Gyps Aero, Mahindra Consulting Engineers, and a whole host of others. So this comes as a bit of a shock, and of course, a larger picture perhaps is different. But for now, there's no explanation. So maybe that's why the stock is down about 4%.
But my thinking, I can tell you without any analysis, that you will not get any answer because these questions don't have answers, because you can't on day one say what your plan is, if there is a plan. So this is what you have and this is what you'll get after 3 days also. Good or bad.
Absolutely. Okay, so let's move on then if there are no answers, right? Because the market is really picking up pace. It's up about 80 odd points. Samir, how are you feeling about the markets now, considering that on one hand, of course, there's this liquidity rush. There's a lot of institutional buying. But on the other hand, earnings are not that great, whether you look at, the tech companies or even some of the larger banks. How are you feeling about that?
Also. So that is true that the results have not been as good as we would like them to have a clear run. But right now, the bigger picture is that India relatively is done well and is doing well. And that there is this gush of liquidity where in the past, at least last 1.5 years, not now, but say 2022 and half of 2021, second half, that the foreigners were big sellers. And for various reasons, they have become bullish on India. And therefore, now you have the real prospect of both FIIs and DIIs wanting to buy. Now, both may not be able to buy because that may make the market go up much more and they may back off. But in generally, both the groups have money and willingness, and there is a case for them to buy. Then that is what is driving the market or can drive it much higher than it is now. As of now, I was not broadly over impressed with the rally if I look at it over a 1.5 year term or even calendar year to date, where it is more or less in line with what return should be. And actually over 1.5 years, in dollar terms, the returns are near zero. So therefore, there is much more to go as it has been in the past without having all these big macro things in our favor. And now we have good history to show, because we don't want to have a case that, generally we've done badly, but now is our time. The story is we have always done well and been competitive and better than competitive in terms of giving returns as a market. And now we have these macro things in our favor, plus a preference over China. So this is the thing why it can go on for a long time.
Hi, Samir. Good morning. Samir, what's the take on IT space? I think the last time you were hinting that maybe some part of the bad news is in the price. Maybe, things are a little bit overdone. But you got the shocker coming from Tech Mahindra as well overnight. And that's one of the biggest losers.
And Infosys. And
Infosys. Yeah,
So,
the last time you joined,
actually,
you were talking
that was
about...
a much bigger.
Yeah, that's true. That's true.
Shock.
And
So
that's
we
what
have
made the street even more
postponed
nervous.
our decision making. So we have postponed our decision making by 2-3 months because, if you go to, we were thinking, Dinshaw and I, that maybe the guidance will be, that band will be reduced from 4 to 7 to 4 to 5, which is what we've been saying for a year, that they'll grow 4-5%. But to go 0 to whatever, that is beyond our normal, range that we would have ever imagined. So therefore, we move on past 2-3 months more again, we'll see. But maybe we are in the end game now, plus minus.
So maybe a couple of months down the line, you could be looking at, selectively buying IT?
Yes, if they fall or if the rest of the market goes up and you feel that, now it's 6-9 months away. But right now, the thing is that when you go from one quarter to the other with such a big reduction, and, we are only focusing on Infi because according to me, they are, the others have also had bad results. They've just said that we will have good future results. So that doesn't mean anything much. Since they couldn't even get this quarter right, to suddenly say, I couldn't get this quarter right, I'm not getting the next quarter right, but the 1 year is okay. Who knows? So in that case, to have such a big change in the top line guidance, one reason you could say is that they are sick and tired of not being able to beat the guidance. So they've just bring down the guidance so that it's easier to beat, which looks a bit odd if that is what they did. Or secondly, that things are really moving fast in a negative way for the whole thing to be brought down so much. So we have time. They are not running away. As I said, in the beginning, for about 6-9 months, we enjoyed the fact that we didn't have them. And then we are broadly saying that they are not hurting us so much that we feel like, moving around our portfolio. So we will just continue in that for 2-3 months. And then if we have to, we can move things around. Because remember, nobody's sitting on cash to buy these things. You have to sell something to buy this because something has been bought with the cash not used there.
Absolutely, and the opportunity cost of it. Samir, I want to ask about financials and pharma. So let's actually start with financials. Financials, of course, is a top overweight, and you've been maintaining that for a while. But in the context of Jio Financial, right? Does that prompt you? I've read a couple of notes saying that, well, we went to Singapore, met all these fund managers, and the top question they had for us was what the impact of Jio Financial is going to be for companies like Bajaj Finance, actually, more than anything else. How do you think about that question at this point?
I think it will be a one-to-one competition because half the things which those guys are financing, these guys are selling. So they can package half, not literally half, I mean many of the things. So you can just package financing along with the selling part. If you're selling mobile phone, you can package it directly with the financing part for people who are approved in terms of, these guys willing to give them the loan or finance it. So it is definitely beyond a point. I think the scale of Bajaj Finance is so big that it cannot continue at the growth rates that are out there. Because if you look at any different sector, none of the sectors grew at these rates. So now if you say that the proportion of people who are getting financing is increasing, I don't believe that is also the case. I mean, it's X% of people were, say, financing, buying a refrigerator with financing. That X has not gone up. And secondly, 10 more guys want to do it. But I shouldn't go beyond that because I may be interested in this stock in some way.
And who isn't, right? On Bajaj Finance. But Samir, Prashant was referring to pharma, and that really is the place to be, right? I mean, Cipla has raised their margin guidance. Dr. Reddy's is at a fresh 52-week high despite weakness seen in their India business. So what's happening here? If someone has missed out on this party, is there still more to go? And how are you guys positioned in pharma?
We have also missed out on the party. And today only our analysts were saying that these is because of one-off and because of some RFPs and, the US guys suddenly wanted to buy some things in an emergency fashion. So we have also missed the party.
So what do you do now? I mean, do you still jump on or do you think...
You see...
Of course, there's such a big... I mean, look at Dr. Reddy's up 30% in last, say, 8-9 months. And I mean, of course, there are many other stocks which have disproportionate gains.
That is the only way to survive. That is the only way to survive because as long as a group, our portfolio is doing well, you can't keep running. We would have liked to have it instead of some other stock which may be up 5% for us or down. But this, there'll be this mad thing if you, for example, if you own 40 stocks or 35 stocks and some stock is doing badly and some stock is doing well. If I look at it stock by stock, I have 20 things to feel bad about maybe and 15 to feel good or whatever, and you cannot survive. You have to look at it at 35 and say, broadly we are doing okay. That means plus minus the thing is working. But any one stock somewhere will be doing very well. We would love to have it if we had it, but now we move on with what we have because as a group we are also doing well, and that is because a large number of stocks are doing well. And your first thing should be to try and reduce the number of things doing badly. Because the rest of the market, for example, is anyway going up, let's say 15% per annum. If some stocks that are to do badly, and many you will know in hindsight, but if you can reduce that, you will broadly beat that. And then if you narrow it and get a few good ones, then you beat it even more. But you cannot, for everything, compare the best performing of that period, and then you cannot handle it.
Yeah, as they say, right, comparison is the thief of joy, and we don't want that. Samir, thanks a lot.
We compare with the index. We compare with the index because the index is also very difficult for 50-60% of the fund managers to beat. So if we are reasonably beating, we are happy, and that's why you call me, I come on CNBC and chat with you. I don't care about every stock, every hour or every 3 months because it's too difficult. We don't mind if we have those, but it's too difficult.
Okay, always great chatting with you, Samir. A lot of entertainment, and thanks for that. We'll, of course, you have a great week, and we'll wrap up the conversation on that note. Well, for the market, the stock of the moment undoubtedly is Cipla, up 8%, and Cipla is actually reaching its all-time high. The level, which is the all-time high, is about 1,185, and Cipla is not too far away from that. In fact, the market cap of Cipla is also now approaching almost 1 lakh crores. So that is really the stock to be in, the MVP stock this morning. But the other stock to look at is Federal Bank. It's in focus. The bank's QIP received a very strong response from investors, raised more than 3,000 crores. To understand the plans and the outlook, Lata caught up with Shyam Srinivasan, who's the MD and CEO of Federal Bank. Let's listen in.
Last year in the AGM, we had an approval for up to 4,000 crores of capital raise. And we did two parts. One is a QIP for 3,000. The other 1,000 is in the process of getting completed, which is, you may have also seen that there's a preferential allotment to IFC. So an existing shareholder looking to take up a higher share in the bank, and we're quite excited by that. On specific to QIP, like you mentioned, I think the subscription for the 3,040 to be specific, we had bids closer to 20,000 crores.
Okay.
Right? So it's quite a exciting one. I had done one in 2017 when we received, I think, close to 2.5 or 3 times. I thought that was good. This time, it was quite encouraging, exciting. The objective was very clear, right? We did want a wider range of investors to look at us. We did want people to think of us as long-term and not short-term. We did want a mix of domestic and foreign. I'm happy that you would have seen the list that has been put out. I think the process got completed late last night, so the shareholders have got their shares and they are hopefully happy shareholders, or will be very happy. It's been a nice and encouraging mix of people who are long-term shareholders from outside India, from domestic, from the large mutual fund houses. And what was most encouraging is the bids that came in were hefty and quite contested for. So we did have a brief moment of, can I get more kind of moment, right? More people asking us, can I get more of your, which is I think a good sign of confidence that the investors have placed in us. So all in all, it's a good one, and start to finish, it took us about maybe 5-6 weeks, but we are where we are today.
Okay. If you could just throw some numbers, where does this take you in terms of net worth, in terms of CRER, more than anything else, capital adequacy?
At the end of the June quarter, we were close to 14.8. This will add another 1.4%, so we'll enter the 16 or so. And when hopefully the pref process will complete on our AGM or around that time, once the regulatory approvals and the shareholder approvals come, it will take us to mid-16s, right? So that was one objective. In terms of the other part of the question was on QIP per se. A mix of investors have been, like I mentioned, both overseas and domestic.
A good breadth of investors.
Good breadth, yes.
Okay. Now, what do you do with the money? Are you expecting that you will be able to do much faster growth? Do you have an internal target in terms of advances growth?
No, I think the capital raise was to support the growth we've been talking of, right? We've been last few quarters, if you've seen, sequentially growing 4-5%.
Yes.
Right, and this quarter that went by, we registered a growth of about 20% Y on Y and sequentially about 4%.
Yes.
And Q1 is seasonally a low quarter, but we saw hefty growth. We believe that the 18-20 odd % growth that we are seeking to do is going to be aided by this. It's not like I would not.
Would there be more risk-weighted assets? Is that also part of
we have a risk.
Because you brought down your RWA.
No, the RWA shift between one quarter and the other, I did explain on the air, was only because of a timing difference. There were some unrated customers who just got rated or added on. So it was not a risk profile didn't change, it's just a timing issue. But the larger point is, our risk appetite is fairly framed. We don't want to sort of suddenly, because we have more money, take higher risk, right? I think to guide an 18-20% growth, we needed a certain capital adequacy. This process, we hit the triggers. Our internal triggers, if CET1 is in and around 13, we need to look for a new capital raise. So over the last 10-11 years, if you've seen Federal Bank, which you have, we've been quite stingy about raising money. We've done one QIP in 2017 and one pref in 2021. These are the only two. Happily, this time we did both on the same day, and for that 4,000 crore amount. And this is only to enable the 18-20 odd % growth that we are visualizing over the next 3 to 4 years. Our belief is this should keep us going for the next maybe 3.5-4 years if we grow at 18% and put back the profits that we will hopefully keep making. And last year was good. If that momentum continues, we should see capital show up.
That was going to be my next question. So when do you expect to need capital again? Certainly not for 3-4 years, you're saying. Okay, where do you see growth? Which are the areas that are asking for loans?
I think our approach has been retail, wholesale, sort of weighted 55-45, retail 55, wholesale 45. We don't want to stray away from that. Within that, there are growth pockets. If you take our retail book, it's largely a secured book. We have a very small unsecured. When I say unsecured, credit cards, personal loans, and to some extent businesses like microfinance, gold, commercial vehicles. These are businesses that we have just about started. So if you take the last 18 months, these have grown at high double digit. High means like 40-50% growth. But they're growing off a very small base. On the whole, as an aggregate, unsecured is about less than 3% of our overall outstandings. We believe in a 3-year phase, as this growth will dictate, unsecured and retail part of unsecured part of retail will be probably about 10-15% of the whole book, right? So the growth opportunity, we are 1.2% share of market, credit market, right? I don't think we need to take crazy risk in any one area to grow, and that's been our model. We've moved from 0.76% share of assets to 1.25, 1.3, so gaining share. I believe we can go up to 2% share without taking any untoward disproportionate risk and still be rewarded for that. So it's so broad-based.
Okay, that's Federal Bank and the expansion plans there. The market is also expanding as we speak, so don't lose sight of that. The Nifty is now up almost 90 points. So we'll talk more about that on the other side of the break. When we come back, Atul Kumar Goel of PNB will be joining in to talk about their Q1 earnings. We will also connect with Rajesh Mittal of BCL Industries and Chandra Kumar Jain of Gulshan Polyols to talk about FCI's decision to stop supply of rice to grain distilleries for ethanol production. More on that coming up.
Welcome back. Well, the start is good and the first 30 minutes as well have been very good for the bulls because we're holding on to those solid gains and we're holding above that 19,850 odd mark, which is good news. But let's move on to our next management. That's another bank, PNB. Well, that's the next corporate on our show. The deposit momentum has been soft in the first quarter. The key positive is the stress has declined significantly with the lowest slippage ratio seen in the past 10 quarters. Mr. Atul Kumar Goel, the MD and CEO of the bank, joins us on the show. Hi, Mr. Goel. Good morning and congratulations on a pretty good set of numbers. I had a two-part question for you. Your NIMs, well, they've seen some pressure on a sequential basis. So what's the guidance we should be looking at out there? And I believe on the asset quality front, now you're guiding for better things in comparison to what you thought, say, a quarter or 2 quarters ago. So give us the number out there as well.
Yeah, good morning, Mr. D'Souza. As far as asset quality is concerned, because it has already declined from the 8.73 to 7.72, and as far as the net NPA is concerned, it has reduced from the 2.7 to 1.98. So last time we have given the guidance for our net NPA will be less than 2% by the March 2024. So already we have achieved 1.98. So we are revising our guidance. It will be less than 1% by the end of the March 22. Similarly, we are revising the guidance from the gross NPA 7 to 6.5% by the end of the March 24 because our slippage has also been controlled. As far as the NIM is concerned, last time also I have told because the entire deposit repricing has not been done. So this is the reason that last time also we have given the guidance for the NIM between the 2.9 to between 3. So we are still maintaining that because although our NIM in the global is as on date is 3.08.
Okay, so you're revising your asset quality guidance lower, which is of course very good. So you're saying asset quality will improve further, but the net interest margins you're saying will be maintained at 2.9 to 3%. Got that. Can you tell us a little bit about loan growth as well? Your deposit growth actually this time was, I think, the best in the last 13 quarters, almost a 15% growth. Is this 15 to 20% growth something that you can do by the end of the year as far as loan growth is concerned?
Sonia, as far as loan growth is concerned, we have given the guidance it should remain between the 12 to 13%. Although if you see the last quarter June, it was more than 14.58. But still we are maintaining our guidance, whatever we have been getting, 12 to 13%, because some of the loan in the short term in the nature. As far as deposit is concerned, deposit is not an issue for the bank because we are having 16 crore customer. Last year we have opened 80 lakhs account, saving bank 2 lakh current account. So whatever the guidance we have given 10 to 11%, we are still maintaining because we don't require much deposit because we are having the excess SLR of the around 5 to 6%. So this is our guidance for the deposit. Although we have achieved the deposit growth more than the 14%, so our basically stays on the CASA, how to improve the CASA.
Right. Mr. Goel, hi, good morning. Could you tell us why your write-offs are still elevated? What can you do to sort of, improve collections really as a whole?
Prashant, if you see what was the issue in the bank up to 2022, every quarter before that, the recovery was less than the addition. Addition was much more. If you see the last all the 4 quarters, the recovery was more than the slippage. And this year we have set a target. Recovery will be more than the double the addition, because if you see the current quarter, last quarter June 2023, our recovery was 5,400 crore rupees, and where the slippage is only 2,300. Moment you are taking the write-off is the 2 type of the write-off. What is the actual write-off? Sometimes if the technical write-off where we have made the 100% provision, but still whatever I am trying to tell you, our focus is on the reduction of the gross NPA by way of the actual recovery, not by way of the write-off.
All right. Mr. Goel, I had a 2-part question. Any fundraising plans you'll have, and what are you planning on doing with that stake you have in PNB Housing?
As far as fundraising plan is concerned, if you see my capital adequacy is 15.54. as against the norm of the 11.5. So there is no immediate requirement of the fundraising, although we have got the approval from the board for 12,000 crore rupees in the current financial year by way of the 7,000 crore rupees for the 81 and 5,000 crore rupees of the Tier 2. In the current quarter itself, June 2020 quarter, we have raised around 390 crore rupees Tier 2, and we are just waiting the rate to reduce to on the 81, then we will raise the 81 as the appropriate time if rate is comfortable as per our choice. Your second question regarding the PNB Finance, because the PNB Housing Finance has already issued the right issue, and we have also subscribed to the extent of the 500 crore rupees, which we have got the permission from the regulator. Our earlier holding, which was more than 30%, now it has brought to 28.15%. So as of date, we don't have any plan to sell any stake in the PNB Housing Finance.
Okay, so no plans to sell any stake in PNB Housing Finance. Got that. I also want to understand how much of your restructured book can go into NPAs, say over the next 12 to 18 months. If you can just help me with that number. And what is the kind of recovery from NCLT that you're expecting in FY24?
I will give the answer of the NCLT first. The NCLT in the first quarter is the recovery is 566 crore the June 2023, and for the next quarter September we are expecting 1,356, and the third quarter it will be around 438, and the fourth quarter it will be around 1,302. As far as your question is regarding the restructuring book is concerned, in OTR1 as on date we are having the outstanding of 5,248, against which the standard is 3,231, remaining is the NPA. As far as the OTR 2 is concerned, the outstanding is 9,911, out of which this 7,323 is the standard, remaining is the NPA. And we have already made the provision for that, the more than 10% as per the guidelines of the RBI.
Right. Mr. Goel, just one last question from my side. Your staff costs, employee costs remain very elevated, and many have pointed out that that is the one reason why at a net level numbers have just about come in line. Could you give us a guidance on that? What should we expect in FY24?
What is the reason of the, I may explain what is the reason of the employee cost, because November 2022, there is a wage revision due. So around 283 crore rupees we have provided in the June quarter, and similarly we have provided the same amount in the last March quarter, and the 2 months we have provided in December 22. When you are providing for the wage revision, there is an impact of the AS 15 by way of the provision for the pension. If you see, because which is the based on the movement of the yield. March 23, the yield was 7.31 and it has moved to 7.11 in the June 2023, a decline of the 20 basis points. On account of this, we are required to make the provision of 1,230 crore rupees for the AS 15 provision in the June 2023. I am hoping if rate will remain safe, so my requirement, which is 1,230, it will go down not more than the 400 crore rupees in the quarter to come. So I am hopeful that whatever the cost to income ratio is as on 53% more, it will be around 51% for whole of the year.
Well, get that. Thank you very much, Mr. Goyal, for joining us, and good speaking with you, as always, here on CNBC-TV18. All the best, and speak with you soon again. I think we've got the market, which is up, still those 60 points out there. The big gainers are, of course, the biggest gainer still remains Cipla with that near 8% pop. Well, on to, an important development, I think, which also has got wider ramifications beyond the sector we are focusing on. We are focusing on distillery companies, which have all corrected recently, in the last 1 month or so. And there has been a bit of a setback because the Food Corporation of India, in a sudden move, has halted the supply of rice meant for ethanol production. Let's talk to some of the companies which use rice as an input. We have Rajesh Mittal, Managing Director of BCL Industries, and Chandra Kumar Jain, Chairman of Gulshan Polyols. Gentlemen, both of you, great to have you guys here on CNBC-TV18. Thanks very much. Mr. Mittal, if I can start with you, sir, just put this in context for us. Exports have been stopped, and now this. As a business, what is the impact?
So good morning to all. Let me correct, it's Rajendra Mittal, not Rajesh Mittal. So
sorry, sir. Go on.
It's really shocking that the government of India suddenly stopped the supply of rice manufactured for the issue of ethanol production. But in the long run, we congratulate the government and compliment the government for taking this E20 program forward, though it's late, but now not too late. So this is a great initiative which will go in a long way to improve the health of the farmers, to reduce the import dependency, positive impact on the pollution part. So every sector will be benefited by this. But the sudden stop of rice by the distillery will disrupt the entire investment scenario, and government should take up the initiative with the stakeholders, should have the meeting with the stakeholders to find a solution. We also feel that this policy of rice to ethanol is not long-term sustainable, but we have to give greater role to the industry for switching over to other food stocks like mainly the maize. The world, 80% of the ethanol is being manufactured from the maize itself. So taking forward...
Mr. Mittal, got that. That's a very comprehensive, well-rounded picture you've provided. But as a business, now that this has happened, now a transition to other things like maize, etc., will take time. But as of now, what is the implication? What have you seen as an impact to your business and the industry as well?
No, I'm positive about the things because the government cannot do away with suddenly one fine morning that E220 program is over. So they cannot do that. And as you can say, taking the stakeholders, the investment part, the banking exposure, the farming exposure, every sector is involved. So they cannot do away with the policy. So they have to find out a solution in between to have the food security of rice and other maize stock. Maize switching over to other, you can say food stock is not...
No, Mr. Mittal, you're saying this is going to be... So what you're suggesting is this could be a temporary measure. But, right, that's what you're saying. So, but if you can quantify what is the... Yeah, even if it is temporary, there will be some impact to the business. That's what I'm trying to understand. Go on, sir.
I think not much. If fair pricing policy is given to other stocks, like that maize, the rate of the maize manufactured ethanol is just 56, which doesn't match the MSP at present. And you see that other rate of this cane juice is 66. I don't foresee that why there is so much of difference between the two. You can say two types of ethanol when the product is same and used for the same purpose. So once this correction is done, so there will be lesser load on the FCI part, and the at present, which is 100% on the FCI part, will be reduced to a greater extent. So government should immediately come with a fine policy of switching over to others by correcting the price. So it is not a very complicated issue that it will take too long time to switch over the ethanol production from rice to other crops. So it will be balanced. So 100% cannot be switched over overnight, but some part can be switched over to some extent. And further we have to see that it's not a long-term policy from converting rice to ethanol. But the 2/3 of the world population uses rice. So the government should have taken immediately with the talk with the stakeholders and find out a solution for
like a middle ground. Okay.
Part to the rice and some part to the other food source.
Sure, got that. We also have Chandra Jain, who's the management of Gulshan Polyols. Now, Gulshan Polyols is one of India's biggest manufacturers of ethanol and biofuel. So we'll get a better sense from him. Mr. Jain, your thoughts, this disruption of ethanol production, what would the impact be for the industry as a whole?
Surely temporarily, yes, but we have to understand why E20 and what is the cause behind it. Our Honorable Prime Minister has drawn a policy of energy security, whereas this food security is there, other securities are there, energy security is also there. So E20 is a part of energy security for the country. All countries who import crude have started doing this energy security, making ethanol from rice or maize or whatever the grain they have done it everywhere. So this policy, this program cannot go back. It cannot go back. FCI has disrupted, no doubt. It will give some disruption for some time, but alternatives have to become. And at the same time, the ethanol has to come from all places. Damaged food grain, maize, FCI, sugarcane, everywhere. Then only they will be able to achieve their 1,300 crore liter annual ethanol blending by 25.
Got it. Mr. Jain, sorry to interrupt you. I just wanted to understand that this shift to maize from rice, how viable is it? I mean, can the entire production be shifted?
You see, it is only dependent upon the price which the OMCs offer to the ethanol. You see, they have got variable prices. As Mr. Mittal said, I said earlier also, sugarcane juice price is 66. Maize price is 56. What is the logic? I fail to understand this logic. Why this cannot be one price? Once the price is given right, yes, everything is possible. It can be shifted, but not overnight. It will need some time. You need 14 million tons of grain, maize to be produced. So we had been saying to the government that you announce the right price so that sowing season is there. Now the maize is a rain-fed crop.
Got it.
It can take over within a due course of time, but not switch over.
Got it. Mr. Jain, if both of you, Mr. Mittal and Mr. Jain, you first, what percentage of your input is rice, sir, for ethanol?
So far it is 100%. So far it is 100% because they have not given the maize conducive price. They have not given the damaged food grain price properly. I don't know who is doing the pricing. We fail to understand, and I also feel the grain ethanol pricing has been taken as motherly treatment.
Mr. Jain, so in the second quarter, what would be the impact if this were to continue through the second quarter? What would be the impact on your numbers?
You see, it is going to definitely affect it, no doubt, because a standalone unit doesn't have any option but to produce ethanol, and ethanol can only be produced with the viable pricing. So far,
got it.
What happened?
So could you give us some idea about what the impact could be just for the second quarter?
It's too early, sir. It's too early to say anything about it because Government is also planning what to do with the ethanol plant, standalone ethanol plant. They are also planning, and everybody is working on it. So let's wait and watch. It's
Got
too
it,
early
Mr.
to
Mittal.
predict
Got it.
anything.
We're running out of time, Mr. Mittal. Same question to you. What percentage is rice?
No, in my case, we will not be having a much of impact as we have a substantial capacity to produce ENA and ethanol. Ours is you can say both the products. We can produce ethanol and we can produce Sectoral ENA. So in the meantime, the FSI supplies are disturbed. We'll be move on to ENA, and we have already done it. So we out of the 600 KLP capacity, we can produce 400 KLPD per day of potable alcohol. That's ENA. So we, on our results as a company, will not have much of impact by having some capacity diverted towards from ethanol to ENA. However, we feel that some disruption will be there, but not to that greater impact on the company's results.
All right, gentlemen, thanks a lot for explaining that to us and joining us on CNBC TV18. Appreciate your time here. For the market, it's actually giving up a lot of its gains. So the Nifty is now trending towards the red, up just about 35 odd points. M&M is your big loser, down 5.5%, and volumes are piling up. And Tech Mahindra is the other one that's getting knocked down post its weak numbers.
Mahindra has lost $1 billion of market cap this morning for that investment that they made in RBL Bank of 420 crores. Even if they go the full hog, they'll make 1,350 crores into the company. But the market's clear. They're saying, capital allocation is prime importance and focus on your core business. 8,000 crores of market cap gone this morning.
And at least if they had come out and explained what the
maybe
reason
they'll do
behind
that, but for now the
stake
street
buy,
doesn't
right?
like the uncertainty.
The other
there
thing
is no clarity.
That it's not helping. The Tech Mahindra numbers are not helping, right? That's the other thing. The stock is down 5%, and it's basically the numbers are numbers what they are, which is extremely weak, and so it doesn't help M&M's cause really as the parent company. Well, Mitesh is with us to run us through what he's making of things on the screen as he's seeing it. Well, there is a bit of a drop-off which has happened, certainly. We were up 60, 65. We're up only about 35 now. Mitesh, what do you have?
Good morning again. See, as I said, I think, we are in a process of consolidation, and therefore, as we get closer to the upper end of the range, which is about 19,900, 950, you will see profit booking come in, and buying around 19,700, 650 will emerge. So I think this process might extend for next few days. So I think trade accordingly. On the stock side, I have a buy call on Granules, which is making a fresh swing high, and good intraday charts here. That's a buy with a stop at 311 for targets of 328 to about 330 to begin with, and then we can look at higher levels. And the other one which I like is CDSL, which I would recommend buying with a stop just below levels of 1190 and a target of around 1275 can be looked at.
All right, Mitesh, thanks a lot for that. So that is a couple of stocks coming in from Mitesh. Let's sip into a quick break. On the other side of the break, we'll take a bit of a breather from equities and talk about commodities. Manisha Gupta will join in. We'll also bring you details of some of the stocks on the move. Well, shifting focus to the commodity markets, Manisha Gupta is here with us in the studio to tell us about the one commodity that she's tracking today. Manisha, what do you have on your list?
Well, I'm looking at energy and gold as well, for that matter, because both of these sectors have seen strong gains. The US Fed meeting has happened, gone. We've seen 25 basis point of a rate hike. The statement was less hawkish, and you have seen a decline in US dollar. Is the reason we are looking at gold, rather the crude oil prices trading at a fresh 3-month highs right now. We actually have seen crude oil prices gain up by nearly 15% in the last 4 weeks itself, and it has been a good going. This is going to be a 5th straight week, by the way, where you are looking at further gains come in for the crude oil prices there. Well, the demand has been on the stronger side, and the support also comes in from the fact that the US weekly inventories have seen a decline when it comes to crude inventories, gasoline inventories, and the distillate inventories also have seen a decline by nearly 0.6 to 0.8 million barrels there, and that clearly has been supportive. Markets also are looking at OPEC and allies cuts, some voluntary, some agreed on in the meetings there, and they will only get deeper in the month of August, and that has been supportive. The Chinese demand estimates have been on the stronger side. The imports have been quite robust. It is about the Chinese internal demand which also seems to be picking up, and more stimulus coming in various focus sectors there has been supportive. If you look at the other distillate prices, then gasoline is trading at a 1-year highs, heating oil at a 5-month highs, and the kind of advisories and forecasts that we have seen in come in for crude also has been positive. Citi has said that crude will average $83 a barrel in this quarter. There also is a report from Commonwealth Bank Australia which says that $85 a barrel of an average is what they are looking at for the 4th quarter of this year now. So strong cues coming in there. But not just crude, it's been a good buying coming in for the precious metal prices as well, with Street telling you that next year could be rate cuts as well coming in. We have seen gold prices continue to gain up. So almost $1980 per ounce, just $20 away from 2000. This is less hawkish US Fed statement clearly doing its trick into the prices there, and we have seen that support coming not just for gold but silver, platinum, almost everything in precious metals and base metals is trading on the higher side there. For gold as well, it has been about strong Chinese buying which has been supportive, and then there was a JP Morgan report overnight which says that for the second half of this year they're looking at an average above $2,000 per ounce, and also by the 4th quarter $2,175, which is going to be an all-time high for gold, is what they expect the prices to come in as. For now, the markets will watch out for the ECB policy, that is today, and Bank of Japan policy, that is tomorrow. So it still is next 24 hours which are going to be quite volatile for currencies and metals.
All right. Well, thanks very much for that, Manisha. Well, that's commodities in focus. But Cipla is the big gainer, 8.5% higher. Ekta is standing by with details on the numbers. Ekta, you know, the Revlimid booster is the big one, isn't it? I mean, X those. I mean, I don't know if you should X that opportunity because it's one time. Are the numbers looking as great, especially the US part? Go on.
Well, you know, that's the thing. Even Dr. Reddy's has benefited from Revlimid generic, which is this cancer drug, where they have 2 strengths of the drug that they're selling in the US market. Cipla has also benefited from the same drug this quarter, and many other companies will. But the difference between Cipla as well as Dr. Reddy's, or maybe a couple of other companies, is that they've upped their guidance for the US business, which is basically the base US business, as well as their margins. And that's what the street likes. The performance X of Revlimid generic, because this is basically an opportunity which is not going to last beyond, say, FY25. So now for Cipla in particular, there are 2 things which have really aided in terms of sentiment. First is that the margin guidance now stands at around 23 to 23.5%. They've broken out of that range of around 21 to 22%. And US sales are expected to be between $210 to $215 million per quarter versus expectations of around $195 million earlier. The company's also received approvals, or the company is optimistic about opportunities such as Advair generic as well as a Brixon generic, which are delayed, but they are still expecting it to come through for the US markets. All this is taking place despite regulatory concerns on their Indore facility, and that's the reason why the street is optimistic on Cipla, that the Indore facility might be under the US FDA scanner, but it seems as though they're firing on other cylinders and taking their business forward.
Okay, thanks a lot, Ekta, for that. Well, M&M is actually the big nifty loser at the moment. It's down about 6%, and the market cap of M&M has been erased by over 11,300 crores after the company decided to buy 3.5% stake in RBL Bank. Not just that, M&M may consider raising its stake in RBL Bank further to up to 9.99%. And the street is fearing, once again, capital allocation policy issues have resurfaced. Hence, the street is taking it negatively. The company has not disclosed why they are buying the stake in RBL Bank. Remember, M&M had earlier addressed all the capital allocation issues that they have faced in the past. They put in a target to get to 18% ROE overall for all their businesses. They sold off all their loss-making subsidiaries as well as the subsidiaries that were part of their non-core assets and grouped each of their businesses based on this into ABC categories. So they had a proper path in place for capital allocation. Now, with this stake buy, once again, those issues have come up. And, M&M comes out with their earnings on the 4th of August. So the next thing to watch will be, along with numbers, if there is any rationale on what was the reason behind the stake buy. But the stock is down almost about 6%. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Rob Subaraman of Nomura and Jahangir Aziz of JP Morgan to talk about the Fed's decision to hike rates by 25 basis points. Stay tuned.